Hey, good afternoon. This is Julie J Auto Trading Strategies. It is Thursday, June 28th, 2:30 p.m. Chicago time. Market is still open. We're seeing live market action on the charts, but it's going kind of slow. So I thought I would start the little recap video for today. We're going to look at the NASDAQ and crude markets. It was a very tough go for NASDAQ, which I'm showing on my screen here. We came in this morning uh, with a sell-off overnight in the Globex, and it was a very bearish tone to the market. Hang on one second, gotta get my little mouse thing working correctly. There we go. So very bearish. A little bit of an Asia session, stop run, and then flush down. And we came into the open where we came back and did the gap, the close for the midnight close. And here's the 15:15 close. That was hit a bunch of times already. But it was ranging tremendously, 55, 56 point ranges. And that's over 60 points. That's $1,200 tip to toe. You just can't afford a $1,200 mistake to be long. And it was brutal, let me tell you, trying to position yourself, long or short, to get back in the trade. The market analyzer was lit up like a Christmas tree, green and red, green and red, green and red. It was just better to sit on our hands until price showed itself the direction that it was going to go in and confirm it. And that didn't occur until after lunch when it did this rally that we're on right now up to the halfback. And this is my red line in the sand from yesterday. This is the line in the sand, the red line that I had drawn on my chart and said if we're below this, we're going to go short. And if we're above it, we're going to go long. So we came right back to the halfback and my line in the sand. So the markets are a reversion to the mean. And I'm glad that it took a pause to rethink that sell-off, because the sell-off was getting way too ahead of its skis. I was giving everyone dire forecasts this morning saying because we had not gotten through the 23.6 fib level, here's the 38.2, here's the 50, that any push off of that would be very bearish, like we had in Globex. So I was expecting a test of it and then another push down. So of course everything in the market analyzer was red, red, red. So that, and then all the dip buyers came in and just kept pushing it up. So whenever you see these spikes, these wicks on the tops and bottoms, it's probably better to sit out, because on the 3-minute chart, we had those megaphone patterns. And the megaphone is when it's going up and then down. So what happens is price just trades between those two levels. It gets outside the band, it goes to the bottom, and then it goes up and down, up and down, up and down. And like a megaphone, you go up and down, and you expand your range as you're going up and down. And anytime you try to go directionally, you get stopped out either side. So it's impossible to trade a megaphone in a directional trading because of that reason. Your normal stops get hit each time, and that's what we saw today on the high-low 2. I just got destroyed on the high-low 2 because it is a directional trading where I'm putting a middle risk And each time I tried to go on a risk, long or short, because of that megaphone, I got knocked out. So the only way to trade a megaphone is to buy the bottom and sell the top. But this is the Saint Mom template, and this is the same thing that we have on the Market Analyzer, the Saint Mom 3. And so this is my MACT Market Analyzer chart template. And so I have the MACT on the 3-minute, and you could see that I was green the whole damn day. We were just fighting it. We didn't want to be long. We wanted to be short, and we got mad when the longs kept pushing it back up. So very tough trading session today. And the best thing to do when you see these wicks and these ranges, like you can't trade $1,000 range and make any money unless you're trading $2,000 and you just sit in there and have enough money to sit out for those wide swings and wait for it to go directionally. And for our, budgets, usually as day traders, we don't do that. We're trying to trade for like $100 or $200 hits at a time, and you get annihilated. So, addressing the market condition, extremely important, recognizing what kind of trading day it was, and then trying to adjust to that so that you can make some profit. And fortunately, I did good today, but got on the right side of this at the right locations, positioned myself where I got to turn around on this and hit some of these when they were breaking out, trading to a specific level and then letting it go. So just doing short stabs at this was the way I addressed it. It would have been okay to take a long trade here also on the bottoms, but it's awfully hard to do that when you're seeing all red when it's going down. You're taking a leap of faith. So I would rather go in the direction, with the tailwind behind me instead of going into a headwind. So we're at my line in the sand. So I'd like to see this break above it, 70, 80, and crush it, keep on going instead of turning around and flushing, which it could. We don't know what's going to happen. The market's out of time now. No telling what's going to happen in Asia or Globex tonight. So hopefully it'll continue rallying. But it was nice to see that it did pull back instead of a huge sell-off. So much for the 2700. Also, the ES is back above its magic level. It's like I was chuckling because it's not. It's like that 3% 10-year. It's just a number. Everybody was freaking out over an arbitrary number. Crude, very, very interesting. It got up to my weekly gap. Let me show you the weekly gap line real quick. Let me get a chart ready so I can show it to you. There was a gap on the weekly chart from get it up here. I need to take the Hypens off. Here we go, right here. You got to be careful to spot these. And I spotted this, and I've been waiting for it, and it came in exactly. If we look at this on maybe a 5-minute chart. So it came up to the line, broke it, got to the second level. Because on a gap, let me go back and show you this so you can understand how to do this. You have two levels. You're going to have a close or an open and a high or a low. In this instance, because it was a gap down, we had a gap down from um, July 27th to July 28th. And so the gap down would be the open of the bar, 73.63, and the high of the bar, 73.84. And so that 63.84 is what I have on the chart, 63.84. And so the price came up to the gap, pulled back. That's where it came, right to the gap, pulled back, and then charged through it, but hit that second gap line, pulled back, broke it like it was going to continue running, and it would have had, a big run to the other side. They either run real fast if they break it. Sometimes they just race to it within 5 minutes. The whole way is closed, and then it bounces, or it hits us like a brick wall. And that's what happened today. Brick wall, right? Got a little bit over its skis, and then here was the big signal, the rejection of because you have the sellers up here. These are sellers sitting up here, right? They're protecting this big gap down. That's why they gapped it down. So they want to protect that. So they shove it down. And on a 1-minute chart, we have a head and shoulder. So here it is. So we got to the gap line, pulled back, did our little about face, and here is the left shoulder, here's the head, and here's the right shoulder, right? And here's the neckline. And so it broke through the neckline. What does it do? It comes back to test it. And then here's your really big selling point. You can buy it here, the break of the neck, or sell the retest. And so here it broke out, and because this was a 1-minute, breakdown, but it did show you that it sold off, and the gap line held. So I'm trying to talk, trying to think and talk at the same time, and I can't do that. The gap line held. So that's a weekly gap too. It's much bigger than a daily gap. But be watching this area, 73.63 and 73.84, because when this 84 breaks, it's going to race to that other side. And I mean, it's going to get up there really fast because that's where it's going, right there, 74.63. So be waiting for that. Or be waiting to see if this is a rejection and that gap's going to hold, and they send it down here and leave the gap, and that could happen, and they'll go back and fill it later. So, but this could very well fail here and go down forever, or for a while, not forever, but they'll send it down significantly. But right now, since it's holding below the gap line, I would imagine that somebody wants to get that gap and close it. Maybe Globex or the U.S. session tomorrow. Who knows? But I love trading those gap lines. So that was fun. I traded that a little bit today. So, but this 3-minute Saint Mom, very, very instrumental for the overall direction of the momentum and super trend. And so this is momentum super trend. It's not meant for a tick by tick. I have some of the other um, setups on my templates for a tick for tick representation of what the market is actually doing. This is just representative of what the momentum and trend is doing. And I've overlaid the new linear regression indicator on it. And I find that was very helpful also. And again, with the same principle, when you're above the indicator or below the indicator for a short, and you've got the closes outside that level, and you're going in the direction, momentum, trend, linear regression, and there's nothing you can do wrong except trade to a level, right? Until it gets back inside your channel. And then it's usually over. And that's what happened today. The move was over. So those weekly gaps are really big. So tough trading today, though. Very tough session. Hopefully we'll get things situated, squared away, so that we can see some more green. I've seen so many people on Twitter saying that there's going to be a recession because the yield curve is inverting, yada, yada, yada. And I keep trying to tell myself over and over and over, you can't have a recession when you're in growth. We're in GDP is growing. The Federal Reserve of Atlanta says that we're going to have 4.5 or 5% GDP growth in Q2. Every economic indicator, there's low unemployment, and there's the companies, or the earnings are going to be coming out 1st of July. They're knocking it out of the ballpark. So there's no way we're going into a recession. I don't care if they invert that curve by this short-term manipulation of the short-term rate. It's not going to happen. We've got all that money coming back to the United States, both by our companies repatriating their money back on our shores and creating growth and stimulating the economy, and we have all the money coming from the emerging markets back to our shores, stimulating our growth. And our dollar is growing. We had the Bank of America guy on Bloomberg's television program this morning saying that he's never seen an economy this strong before. Everybody's bullish this economy, so don't listen to them telling you that there's going to be an inversion of the curve, which is going to spark a recession. We're in an expansion. When the GDP is growing, that means expansion, unless they've totally changed everything. And we're not paying attention to anything anymore that I learned. Now, granted, I'm not an economist, and things do have a way of, surprising us all. But normally, when you're in an expansionary growth phase, who cares what that short-term yield curve is doing? Go get the money, go make the money. That's all I'm saying. All right. So y'all have a great evening, and we'll come back at it tomorrow and try to approach the market and get something out of it for Friday. So y'all have a good evening, and we'll see you later. Bye-bye.